Hi again. We're excited to bring you Unit 2 of Welcome to Bitcoin and happy to see you've continued your journey down the rabbit hole. For this module, we're going to focus on the investment case for Bitcoin. Bitcoin can be viewed as a kind of digital gold or digital property, and the fact that there won't be any more than 21 million coins ever is important. Governments can print more fiat currency, and today they do it in the form of debt. Companies can issue more stocks, more housing can be built, and more gold can be mined. But no matter what, you can't make more than 21 million Bitcoins. Why? It's written into the software code, and that code is distributed among thousands of computers around the world securing the network. In an increasingly digital age, people need money for the internet, and Bitcoin acts as digitally scarce money for the digital age. So let's review the monetary attributes table from Unit 1. Reviewing the table, Bitcoin is divisible down to 100 million Satoshis per Bitcoin. It can easily be sent in tiny fractions. On portability, Bitcoin is digital, and thus it is far easier to use for internet commerce, and it can also be used in brick-and-mortar commerce. Bitcoin is durable. It can be backed up in multiple locations. Bitcoin is more easily verifiable than gold or fiat currency, as we simply use computers to verify the entire supply of Bitcoin. In terms of established history, gold does have the advantage of having been used for thousands of years. However, Bitcoin has now been around for about 14 years, and it has significant advantages in other areas that contribute to why more and more people are adopting Bitcoin over time. Bitcoin is far more censorship resistant than gold or fiat currency, as you can simply send or receive it using any smartphone without first asking permission from any authority. In many ways, Bitcoin is clearly superior to our other options. Fiat currencies are devaluing over time, as you can see from this chart showcasing the dramatic decrease in purchasing power of the US dollar over the years. So in other words, even if you have the same amount of US dollars, those dollars buy you less and less things as time goes on, less food or a smaller car or house than you would have otherwise gotten if the value had stayed stable. Over the short term, it can seem like the dollar is stable, but if you zoom out, you can see that it has collapsed in value. It buys you less, and this is why our parents and our grandparents tell us how much cheaper things used to be. And remember that many people around the world face even greater losses in purchasing power than US dollar users, as they experience even greater inflation than Americans do. Now, if we turn to gold, gold has mostly stayed flatline over the years. While it has risen slightly, it definitely hasn't risen faster than the loss in purchasing power of the dollar. In contrast, Bitcoin has averaged over 80% appreciation per year over the last 10 years. So even though Bitcoin is volatile over the short term, let's look at this in log scale. Clearly, over the long term, investors or Bitcoin savers did very, very well. Even if you only had a small percent of your portfolio in Bitcoin for the long term, most people accumulating for a period of 5 years or more have increased their purchasing power. If you were to buy Bitcoin and it dropped significantly, would you still have conviction to hold, or would you sell? In order to hold for the long term and see the benefits, we have to learn enough about Bitcoin and its properties. Having an investing thesis helps us keep on holding even through drawdowns and price drops. So what kind of thesis makes sense for Bitcoin? Digital gold is one idea. Gold has been used as a long-term store of value for thousands of years by many people from different cultures around the world. If we view Bitcoin as having qualities that make it good as a long-term store of value, we could assess Bitcoin as digital gold. The global market for gold is around $12 trillion. Some of that relates to industrial use, like jewelry, for example, and some of it relates to monetary use. In any case, even with back-of-the-envelope math, $12 trillion divided by 21 million Bitcoins comes out to about $570,000 per Bitcoin. So with Bitcoin around 22,000 in March 2023, if you had a digital gold thesis, clearly there's a lot of upside still. As we spoke about before, if we view Bitcoin as a technologically superior way to store our value, it can make sense to save with it. With Bitcoin, we can also custody it and send it around the world easily. Bitcoin appeals to investors for similar reasons that gold is appealing. And this is just the low end of what's possible with Bitcoin. Many would say that digital gold is actually a big understatement of Bitcoin's potential. So what else is out there? Serving as internet money, a native currency of the internet in a seamless way, has to be worth something, right? Just think of how many times you've had to type in credit card details and jump through hoops to buy things online or send someone a wire transfer that doesn't settle for days or even weeks. Now consider how seamless it could be with a natively digital money that can be used by anyone with a phone. People all around the world use Bitcoin, whether that's on both sides of the Ukraine Russia conflict, or whether it is those protesting in favor of feminism in Nigeria, or anti lockdown protesters in Canada. So even if you agree or disagree with any particular cause, you can probably appreciate being able to save in a form of money that corporations and governments can't control. Bitcoin is unlocking uses that were simply not possible before, providing global financial accessibility and banking the unbanked because of how seamless it is to use. It is empowering young people in underbanked societies to access financial services or earn money online that can never be inflated or confiscated from them. Now, as we know, the internet is becoming more and more important for commerce around the world. If Bitcoin competes against other monies, it's useful to understand just how big the market of money is globally. Some estimates put this around $82 trillion by Visual Capitalists. Now, if we divide 21 million, the total Bitcoin supply, this yields about 3.9 million US dollars per Bitcoin. Even if you thought Bitcoin had only a 10% chance of becoming global money someday, you could conceivably forecast an expected value around $390,000 per Bitcoin in today's dollars. Given the price today is far lower, this also presents a significant upside potential. But it's a good time to stop and address Bitcoin's volatility. Bitcoin's price is volatile, and it does go through big up and down cycles over the years. Bitcoin has gone through 4 separate 80% plus drawdowns from peak to trough, as this has happened before in 2011, 13, 14, 2017, 2018. It can, of course, happen again. So it's important to understand and think through carefully what you're holding and why you're holding it. Zoom out and look at the price chart. Now let's zoom in to 2013. Notice how at that time, $260 around March, April 2013 was the all-time high, and then it crashed to $50. Later that year in 2013, it went to around $1,200. Now, if we move forward to 2017, we can see that the prior all-time highs in 2013 look like mere blips. Now, zooming back out again, you can see that some of the prior 2017 highs are barely even a blip on the chart today. But on the good side, the reward for this volatility is the incredible gains that Bitcoin provides in fiat terms over a longer time horizon. So even if Bitcoin is more risky in terms of price movements down, it's more than worth it given the long-term returns that Bitcoin holders see. Remember also that you don't have to be all in on Bitcoin. You can simply take a small percentage of your investable assets and save with Bitcoin for the long term as an insurance policy. This is known as sizing your position accordingly. For some people, this means 1% of their portfolio. For others, it's more like 5 or 10%. Other hodlers with long-term conviction have Bitcoin representing more than half of their investable assets. The whole crypto space can be confusing, given that there is so much noise about various coins, Ethereum, Dogecoin, and so many others. But consider why Bitcoin is special. It was the first working solution to the problem of trusting third parties. It has the biggest network of users. It's the most credibly decentralized. And in many ways, altcoins are attempting to reinvent the wheel. We can't meaningfully improve on the wheel by fine-tuning some parameters. People new to the space think they've already missed the boat on Bitcoin. This then causes people to think, well, why don't I buy an altcoin in the hopes that it goes up in price more exponentially than Bitcoin does? In their minds, Bitcoin could be like the MySpace to the altcoin Facebook, after all. But here's why that doesn't make sense. There have been over 20,000 copycats and supposed improvements to Bitcoin. This one's faster, this one can enable digital art, and none of these projects have surpassed Bitcoin's network effect or monetary superiority. And a common pitfall for many is attempting to trade in and out of Bitcoin, attempting to time the cycle, which means sell Bitcoin high and then rebuy it low. But the reality from looking at day traders and studies across multiple countries and across multiple markets is the vast majority of them lose money. It isn't much different from gambling. Only a small percent of them are able to sustainably profit, and some of those who do are still only making a small profit. Take a look at this study on Taiwan stock day traders from 1992 to 2006, which showed that less than 1% of the day trader population was able to predictably and reliably earn positive abnormal returns net of fees. The study analyzed 450,000 individuals who were day trading. And to abstract away from the luck factor, it was documented that less than 1% of the traders in the study were able to earn reliably positive returns net of trading costs in consecutive years. For traders, also consider there may be taxes and fees associated with regularly buying and selling Bitcoin. So for many people, it's just simpler and more tax efficient to buy and hold for the long term. Set it and forget it. A common strategy to turn Bitcoin's volatility to your advantage is to regularly purchase a little bit every day, week, or month. This is called dollar cost averaging, or DCA. Some investors lament that they can't easily buy a whole Bitcoin. But Bitcoin is divisible down to 100 million smaller units called Satoshis, or sats. And if you've done your research and built up your own long-term thesis on why Bitcoin is superior money for the digital age, then even owning a small chunk today could be very meaningful in the future. There are no shortcuts to building wealth. But those who have a low time preference and regularly save with Bitcoin for the long term have increased their purchasing power. So similar to investing, time in the market, not timing the market, has yielded very strong results for Bitcoin savers.